Oil long-term technical analysis for the week of November 28, FXEmpire.com. The light sweet crude market did have a fairly bearish week, although in the big scheme of things, not overly so, testing the 95 level again. The markets are starting to get very nervous, and as a result, many of the riskier assets will sell off. Essentially, that's what happened to the light sweet crude market this week. There are issues in Iran as far as their nuclear program, and anytime that there's any threat of war in the Middle East, oil markets respond by staying lofty. The EU is certainly heading into recession again, and the US GDP was much lower than anticipated this previous week. So, as a result, there are bearish fundamentals pushing this market around as well. And as such, we think the trading for light sweet crude will be very choppy going forward. The 103 level above should be resistive, and in order to sell this market, we need to see it go behind or go below 90. The truth is this market will probably be short-term scalping in this range for the short term and for the foreseeable future, as there are just far too many economic situations out there that will push and pull at this vital futures market. With that in mind, it is not suggested to buy long term unless, of course, we can fall down to 90 as support, prove that as very supportive, and at that point in time could be considered a longer term buy and hold type market. Brent markets fell this past week as well, and we are finding support at the vital 105 level. If the 105 level gives way, this would be very bearish for this market, and we think that we would retest the lows right around $96 or so, and could potentially have a head and shoulder starting to work itself out. We think again that this will be a shorter term market as we ping around between about $5 to $7 worth of trading range. In order to find a longer term direction, we are going to need to see the 105 broken to the downside, or perhaps the 115 broken to the upside. In the meantime, we think that the markets will be very choppy with the aforementioned economic indicators and the possibility of military strikes on the Iranians looking forward. Looking at the extreme longer term, we can see that this downward channel still does remain. So we do have a downward bias in this market, but we think it may be ready to pop again before we see any sustained move to the downside.